So Aisha, what drives the market in the short term is always skepticism. The disbelievers or the naysayers have to turn believers. So let's say 6 weeks ago, nobody believed that market would make a comeback. Now that markets have made a comeback, everyone is saying, oh, we missed it. Yeah. How could we miss this grand summer one-way rally of 2023? And that is something which is pinching everybody.
Traditionally, when nothing happens in May, and the phrase goes as sell in May and go away.
Yeah, maintaining that don't sell in the month of May, and don't go away anywhere. Please watch ET Now every morning
because we give
exactly. Yeah. Now, just to put things in context here, what makes me reasonably confident that why the upturn in the market will continue is because FIs have just about made a comeback, and they are coming back. Yes, it may look like a long streak of buying by foreign institutional investors, but in quantum, they're still negative for the year, guys. Foreign institutional investors may have bought for 13 days on the trot now, but they're still negative for the year. And the number for 2023 was one of the biggest, 2022 was one of the highest sell figure they've ever had. So I think that this is just the turn of a global allocation move which is coming back to India. Let's look at mutual funds. I've been told the cash levels in mutual funds right now are almost at 5%. Flows into SIPs are coming on a daily basis. That clearly tells you that mutual funds are also sitting on cash. HNI investors and ultra HNI investors, when I speak to them, they are excited that their NAVs and the portfolios have gone higher, but nobody really has managed to really, this is not like the COVID comeback rally where some of the big ultra HNI investors, they got their call right. I don't think any ultra HNI investor whom I speak to on the record, off the record, has really participated. Then you have the trader. Look at the open interest. Look at the open interest in the Bank Nifty. Look at the open interest in the Nifty. There is just no participation. There is so much of disbelief. There is so much of denial. And now I think the FOMO has kicked in. So, the word FOMO, I use it so loosely, but that's how it is. FOMO has kicked in.
Yeah. I mean, even yesterday, to think of it that you were optically there at an all-time high on the Nifty Bank, ICICI Bank, Kotak Bank, none of them participated in the move.
Yeah. So if you specifically talk about the Bank Nifty, I think let's discuss it. Yeah. The Bank Nifty was at these levels in December. 14 December, the Bank Nifty was at this level. Now, from 14 December, if you map what stocks have moved, you've got a big change there. A big change there because SBI has been flat, IDFC Bank is up, AU Small Finance Bank is up, Kotak is up, and HDFC Bank has started outperforming. My limited point here is that while the Bank Nifty has come back to same levels, there are three big differences. Difference number one, the composition of the Bank Nifty has moved from PSU to private, and within private, small tier private banks are outperforming. B, the level of open interest I think is very low if you compare this with what the level of open interest was in December. And third and most important, Aisha, Avan, is we've got 2 quarters of earnings. We've got 2 quarters of earnings which have come into the Bank Nifty. And from FY23, we are in FY24. So you're talking about next year estimates, which means on terms of an valuation also, because the banking sector is growing at 20% plus, you got the Bank Nifty which has come back to the same level, but in terms of valuation, it is 15% cheaper.
Yeah, and just pointing out that stark difference in the last leg of the rally when the Nifty Bank was near those life highs, it was the likes of PNB, Bank of Baroda, Bandhan Bank that really scaled up or did a lot of the heavy lifting, and then Axis Bank. This time it's been IDFC first, as well as IndusInd, Bandhan Bank, as well as SBI. Well, that's the Nifty Bank aside. Yesterday we went all guns blazing, so close, and yet it was almost a touch and go moment. But the other trade setup points that we want to discuss is the fact that you've got FIIs, yes, they're buyers for 13 straight sessions on the trot, but the bond yields as well, they continue to decline. In fact, below the 7% mark, that's been for the first time or the lowest level since we've seen since March of 2022. And a fall in the bond yields typically, Nikunj, translates into lower borrowing costs for other entities as well.
Bond yields coming down is good news for you, me, Ash, and everybody in this room. Because home loans, car loans, personal loans, all of them, they start coming down. What are bond yields? Bond yields are essentially an indication of where the bond market feels the interest rates are moving and inflation is moving. The bond market post that inflation number is telling you that, okay, interest rates in India have peaked out. Shaktikanta Das kudos to him, was absolutely right in not increasing interest rates in the last policy, even though Fed is increasing interest rates. So he's taken a bet on India rather than getting over-influenced by what the Western world is doing. So full marks to Mr. Das in terms of how he was able to see through the nuances of Indian economy. Bond yield comes down, which means that in the short term, bond markets are going to rally. And fixed income products, bond instruments, I think they will see a shore up in NAV. But more importantly, if the cost of borrowing comes under control, that's good news for consumer, that's good news for corporates, that's good news for even equity underlying valuation. So bond yields coming down, if they've really peaked out, which it appears to me, because commodity prices have fallen much more after the latest print of inflation. I think the scare of inflation, which in a sense has been the albatross for Indian market, I think is going away. See, what was the problem for India? There were two problems, inflation and valuations. Inflation and valuations. Valuations are okay after the time-wise correction, and inflation is peaked out. Now, what is the worry? And still there is no participation. So the believers have to come. They'll have to buy.
Absolutely.
That's the only way out.
Absolutely.